Hi folks, Nick Shaheen here recapping the week ending July 24th. Week ended on a red note. As you can see, the SPY, S&P, down big red, and these are weekly candles for a year. So did the NASDAQ, and so did the small caps. Now, there's a difference in what happened throughout within each index. For example, both the S&P and the small caps hit the highs, close to the highs, and also now are close to the lows of that box, imaginary box, which means we've been range bound for so long, most of the year, most of the past 12 months, I should say. And we threatened to break out, we threatened to break down, and the last breakout threat fell apart this week, and mostly on a bad Friday. Markets fell 1%. And 1.5% on the small caps. So you can see we're range bound, and now they're both left in a situation where they both need to bounce or risk much lower prices. I can envision that if we lose the 207, the 205 will come into view, then the 200. So there are levels to be respected or suffer the consequences. So the bulls need to get to work. Now the NASDAQ had a little different story because the candle for the NASDAQ last week was fantastically big based on a few huge mega movers. But we noted that the moves were on bad breadth, meaning the strength came concentrated from a handful of big boxes. And by boxes, I mean something like that. We had a huge move in a few ones, and Google was the culprit, one of the culprits last week. A sympathy move from Facebook of 4 or 5% in one day. So these move indices, whereas you don't see everything red, green. You see just green concentrated like this. So it kind of fools you into thinking that there was better performance than there actually is. So so the chasing would have been wrong because you needed to see really what the market wanted to do. What better representation of the market than to look at a basket of 2,000 shares, stocks, which is the small caps, for example, and they weren't as happy. Yeah. So anyway, the all-time highs were set on a bad breath week. So I reserved the judgment until I see what happens. This week, we saw the flip side of things where a few names concentrated brought everything down, even though we had huge ups in Amazon, for example. So now we ask ourselves, what's going to happen here? Why do I say that? Because look, what was resistance for a while, boom, we busted through it, now is back in style. So now the candle is back where we need to say what was resistance, will it become support? Important question to answer next week. So we do have some decisions to make next week. So what caused the drop this week, and more specifically on Friday as the week ended, the 24th? There were some things going on in the bond market, price action, that tells us that there was some unease about things outside of the U.S. And with Greek being set aside as a concern, immediate concern, since both sides are talking reasonably, then I point the finger to China and the fear of a China-led debacle, potentially, because we really don't know much about what's going on in China. We can just speculate. And with everything falling, like oil down another 1%, now it's under $48 crude, that's almost, to the lows of the past 12 months or so. So the speculation becomes, okay, why is gold falling? Why is copper falling? Why is every commodity is falling? Is it a China disaster? Is something going on in there that we can't tell about? And the stock market add to it, yeah, it's propped up now, but it's artificially propped up. So unease about that. I don't think it was rate hike fears, otherwise we would have seen it in the rates, and it's not there. This also adds to the strength of the dollar too, because we believe that eventually the rates are going to go, so it doesn't help the situation. So there's big disconnects all over the place. So the reason is important to know. However, next week, like I said, since we do have these levels, I would like to see some stabilization before I enter new long trades or new short trades. I'd like to see what the picture is going to look like with another day to chew on things. All right, so focus points, Apple. Apple provided some security, even though it dropped hideously on earnings. It got the lows got tested and it held. I want to see that continue, and the small caps, obviously. And I also would like to promote the sector that's going to come into play next week, which are the biotech/pharma. Biogen was down 22%. Gilead was down 4%. Celgene 3%. You get the idea. Well, guess what? Gilead, I believe, reports next week. So this big box is as big, if not a little bigger than Apple collectively on the NASDAQ. Therefore, it deserves our attention, so we will promote it for another focus point. Keep watch and be aware. And as far as short traders that are short should use these drops to book some profits and shore up some shorts that were in trouble last week. The week prior, I should say, when the NASDAQ was running. Conversely, traders that are excessively long should book some profits, especially in the areas that have the most profits, like the highest altitudes, which are usually the pharmas, because they've been leaders so far. So be careful. There are opportunities. We've got Facebook reporting. Some people expect good things from it. Very few people expect bad things. Maybe the blind side is the way to go. I'm not sure. Earnings are always a coin flip. Only play with small money that you can, like a lottery style ticket. So that's what people should do. The ranges have held. We've been spot on with the ranges. The one thing we need to look at are the transports. IYT is a good way to look at it. They need to hold. Range is tightening. Move is coming. They need to either break up this lower high trend or lose a lot of points and drag the markets down with it. There are some things to worry about. Yeah. XHB, the home builders, is probably an area where some puts could pay if they don't get a bounce soon, because they're at a point where they could lose a lot of points, and my guess is they could have a couple of bucks downside. All right, so these are the issues at hand. If you have any questions, please let me know. Nick Shaheen signing out.